shareholders are what, institutional at the moment?
Yeah, largely institutional. I mean,
Canadian, or
yeah, there'd be Canadian, some US, and there's one or two in Europe, but basically it's a North American-based shareholder base.
So, any names in there that we'd recognise?
Yeah, I mean, well, Northern Star are our biggest shareholder.
But that's presumably part of the deal.
Part of the deal it was,
right,
yes.
okay.
Century Select, which is now CI Investments, they're a large shareholder. Donald Smith.
They're a Canadian promoter.
Donald Smith's out in New York.
Yeah. So I meant the CI guys are.
Well, I was a promoter. I mean, they're a big sort of
Financial.
blue chip Canadian fund, yeah.
Okay.
I'm sure they'd be a bit worried if you heard them called a promoter.
Okay.
Yeah, so those would be some of the big shareholders. We had BlackRock at one time, Arbim. So we've had actually a pretty good list.
Names in there. And how big's your retail following?
I would say it's reasonably big. It's I would say we're probably about 10 to 20% retail.
Right. Okay. Yeah. Mainly Canadian, I'm guessing.
And North American.
And North American.
Canadian.
Right, North American.
Yeah, I mean, every now and again I'll meet someone from Europe who has picked the story up, but...
right.
Yeah.
And is there much liquidity in the stock at the moment?
It's better. When we first started out, I mean, we were, because of those bigger shareholders, there wasn't a lot big float. So, yeah, liquidity early on was tough, but it's better now. I mean, we're not trading millions of shares every day, but a few 100,000 usually, and then every now and again you'll see some blocks. Yeah.
Okay, and those are clearly the institutions, trading in and out. But so what's the retail guy? What are the retail guys doing for you in terms of? Do you think you've got people understand the story? Or, I guess,
yeah, no, I would. I mean, because I've done this a few times. I've always valued retail, and I mean, one of the challenges of retail is making sure they understand what you are. But I think from the questions I get from retail investors, they do actually understand.
What questions do they ask?
They ask the same sort of things you're asking, which says to me they're not off in some strange place asking questions that aren't relevant. They absolutely understand what matters to us. They ask the same questions institutions do.
Right, okay.
Right? Which is the same questions you're asking, because it all boils down, there really are 2 or 3 key questions for our story.
Yeah, well,
right?
Absolutely. And that people need to believe you can deliver against those.
Oh, absolutely. I think I've got a decent track record of doing what I say, and I am absolutely totally confident that we are fixing this.
Okay, fantastic. And so who else is on the board that we need to know about in terms of active members of the board?
It's a very small board, and it was done like that deliberately. We've only got 5 people on the board, and I think with at its basic level, the board's job is basically to make sure I do my job, or management does their job. But I think with a smaller company, you want people on who are willing to roll their sleeves up and help you, because we just don't have the numbers of people. So our chairman is Mark Wellings, who was former investment banker at GMP. He ran their London office for a few years as well. We've got Tamara Brown, who is VP Investor Relations and Corporate Development for Newcrest in the Americas. There's myself. There's Rene Marion, who was chairman of Richmond. He was former Barrick and Orico. Really good mining engineer, understands capital markets. Well, he was the chairman of Richmond when they got sold. They went from 30 million to $1 billion. So he's seen this movie before, and he worked for Barrick on this asset, right. So he knows the asset. So,
but is he an active
Yes,
participant?
yeah. No, I talk to all of them regularly because I use their expertise. Like Rene, I mean, very important for us as an operator. So early on, when I was trying to figure out what was going on, I said, well, what would you do? And actually, Keith Boyle actually came through a recommendation by Rene when I said, well, who do you know out there who would be a good person to take a look at this?
Okay.
And then we've got one nominee from Northern Star.
Right.
Yeah.
Okay. And they obviously must know a lot about this asset, and the fact they've stayed in says something. I mean,
I think they'd like to see us grow.
Right. It wasn't just like option money, as it were. We'll just do a deal. We could have raised enough money. We could have just paid them out cash. Right.
There were a couple of things. I think they liked the opportunity in the business model, so they thought they could make more money. Right. They saw that we could be a building block, I believe. And selfishly for us, I knew that the number one question I get asked was, well, why would Northern Star sell it? So having them in with someone on the board.
Go on then. What's the answer?
Oh, what's the answer to that? Well, I mean, you got to look at, because this, what we're doing here is really kind of what they've built their business model on. But within about 3 months, they bought 4 mines. They bought this one, a mine called Jundee in Australia, a mine called Canona Bell in Australia, and a mine called Kundana. And 3 of them they got running the way they wanted them very quickly. So this became a bit of a head scratcher for them.
Right.
So they decided to run a
in the
process.
sense of what? It was
Well, it just wasn't going where they wanted as quick as they wanted to.
Right.
But they actually gave us the entire operating team that we needed. So the team that made a success for us when we took it over were the people that had been working for them previously.
Right.
So they were very important to us in getting it working.
Okay, thanks for that. So let's talk about last year in the context of how do you think it went? What would you have done differently? I think you've answered some of these questions already, but if you try and summarize that for us.
Look, I gave you the reasons why it didn't go the way we wanted. So what would I have changed? Well, I guess like as it all, all these things, you say, well, early when it first started going wrong, we probably should have been more dramatic in trying to fix it immediately. But you sort of think, the next quarter wasn't bad, so you think, okay, maybe now we're back on track. And then late last year, you could see it was beginning to go off the rails again. So yeah, I think like if I really knew what I know now, I would definitely have moved faster.
Hindsight mining.
Well, yeah, but it's we were asking all the right questions. I had the board involved, and we were, well, what is this? What do you need? And so yeah, but that really is hindsight. I mean, it's like you're peeling away layers of what it takes to get there. Right.
Okay. And again, I know you dealt with this slightly. So this year, what should shareholders be looking out for in terms of what you're doing?
Well, they quite simply, on a quarter-by-quarter basis, they just need to see that we're improving how we're operating. We're back to making money. That is simple as that.
So making money or cash flowing? What's...
No, making money, because I'm all about free cash flow.
Right.
And like I said, when we had the asset going the way we wanted, we were making, making into the bank $2 million a month.
It's not bad.
So that's what
Get back to that as quickly as possible.
Yeah, and we built a second mine, an open pit mine, all internally generated. We've never raised money since we went public. So we must have been doing something right.
So you're debt free. So there's no kind of funky financing sitting in the background looking to clobber you?
No, if you look on the balance sheet, you'll see a small number for debt, but it's because we've lease financed the equipment. Right. And then it just shows up as an ongoing cost.
Sure.
Yeah.
Very normal. Okay, so give us your 5 reasons why you think investors should be looking at you and investing.
Well, look, you're looking at a first world. That's a start. Your first world location, a substantial asset where there's tremendous exploration potential. 100,000 ounce a year producer with an enterprise value of $20 billion US. We will be going back to free cash flow. We're one drill hole away from a discovery. At some point, we will. We've already expanded the reserves and the resource. But if we find something new, higher grade, there wasn't an ore body there at one time that's part of our mineralization called Timor, and it was 1 million ounces at half an ounce. So if we found another one of those,
you'd be happy.
Yeah, we'd be happy. But this is what happens with these assets. Fosterville, I mentioned before, Curtin Lake Gold, that was 3 years ago a refractory ore body at 4 grams, and everybody knew it was rubbish. And they drilled some holes, and now they're mining 50 grams a ton. I'm not saying we're going to find 50, but I'm just saying that's what happens with these systems.
Yeah.
If you try and understand them and you drill in the right place, there will be extensions. They don't just end. And then this system, this is an immense system. It really